Gold, a race to the bottom. This is the Equity Management Academy weekly podcast for May 11th, 2022. Summary. The Consumer Price Index inflation rate slowed at 8.3%. The 10-year note is at 3.01%, moving back about 3%. We appear to be building a bottom in gold, silver, the Nasdaq, and S&P. One thing that the mainstream media appears to be missing is the closure of the Black Sea ports, which cuts Ukraine off from the world, and Ukraine is a breadbasket for the world. Fundamentals. The Consumer Price Index inflation rate slowed at 8.3%, but inflation is still at high levels, and it has risen over the short period of time. The 10-year note is at 3.01, moving back about 3%. We may have reached a strong resistance level for the 10-year note at 3.13. The ceiling seems to be at about 3.25% yield. This is causing a reversal in the market, with the Nasdaq and the S&P potentially moving up. The 10-year trading at 3% puts the Dow Jones at about 4,100 as fair value. So trading around 4,000 makes it somewhat undervalued in terms of both the Nasdaq and the S&P. The variable changing price momentum indicator appears to be indicating that we are looking at a bottom unfolding in stocks. Nasdaq is building a bullish price momentum within the bigger downtrend. The floor appears to be around 12,015. It could gain momentum up to 12,600 or even up to 13,092. There is resistance around 12,550 to 12,700, which needs to be broken. The odds appear to be that the Nasdaq will move up with more short covering. We appear to be building a bottom in gold, silver, the Nasdaq, and the S&P. If the 10-year note goes below 2.75% yield, it would confirm that the inflation numbers have peaked and interest rates have also peaked, which would be bullish for commodities and stocks. More supply chain disruptions. One thing that the mainstream media appears to be missing is the closure of the Black Sea ports, which cuts Ukraine off the world, and Ukraine is a breadbasket for the world. Russia is bombing silos and fields in Ukraine, which reduces grain and other agricultural exports from Ukraine. Sanctions are also keeping Russian agricultural products out of the global market. Poorer nations, especially in Africa and the Middle East, are dependent on such exports to keep food prices down. We are in the midst of not only a war in Ukraine, but an economic war between Russia and the West, with China dealing with its COVID lockdowns. The supply situation appears to be destined to get worse, which will raise food prices even more. Western sanctions against Russia appears to be contributing to increasing inflation. The balance is between the economy and the war, with Russia seeking to control the oil and gas in the Black Sea region, which is a major producer. In terms of rates, the Feds face the risk of raising rates too fast, too soon. But the market already has moved the 10-year note about 3%, while the Fed talks about tapering and raising interest rates. The market, in a sense, is doing the Fed's job. Price direction and standard deviation. Silver. Silver is at $25.85. We recommended long silver at the weekly buy 2 level of 21.37 and the buy 1 level of 21.87. We have a conflicted picture. The weekly numbers for silver indicate that we have a lot of support in that area. This is where you want to accumulate supply or inventories if the market gives us a short signal short term. We are at an extreme below the mean, where the odds greatly favor the market reverting back up. We are probably going to get more short covering in silver. We are trading above the weekly level of 21.87. This is now a support area. The daily market momentum is bullish and the weekly target is 22.61 according to the AI of the variable changing price momentum indicator. Yesterday, we seemed to put in the low for this movement at 21.15. We have buyers coming into the market and the market may be changing to a bullish trigger point with 22.61 as the weekly target. Gold. Gold came back up above the weekly buy 2 level of 1821. 1851 is the weekly buy 1 level with a daily target of 1856, which was completed. Now we are back testing the 1851 level. We appear to be building a bullish price momentum. We hit 1856, so now a close above 1846 will activate another daily bullish trend momentum. If we break down, we could reach 1827, which is the daily buy 1 level. However, the weekly numbers are in a major area of support where you should accumulate long positions. We are buying the dips in gold to add to our long-term position in gold. Equity Management Academy CEO Patrick MontesDeOca said.
Thank you for listening. If you want to learn more about what we do, please go to the Equity Management Academy, ema2trade.com, or listen to any of our previous episodes.
Are you looking for an automated artificial intelligence trading system? Do you want to analyze commodities and financial markets to determine when to buy and sell? Looking for an indicator to predict future trends in the commodities and financial markets? Welcome to EMA2 Trade Live Signals. Our variable changing price momentum indicator, VCPMI, is an automated AI trading system developed and tested over a decade. The VCPMI algorithm is based on age-old vortex mathematics combined with Fibonacci wave theory, trend analysis, pivot points, and several other widely accepted financial analytical methods. The VCPMI can help you take emotions out of your trading and rely on simple mathematics to predict future trends in financial markets. This approach will make your trading more effective, consistent, and profitable. VCPMI algorithm. The VCPMI code points and levels are support and resistance levels and behave exactly like any historical supply and demand level. Therefore, the VCPMI code levels are useful as an index tool for both day trading and for selecting and exercising entries and exits for longer-term traders. Why VCPMI? The VCPMI relies on artificial intelligence to analyze markets and predicts future movements, which seek to determine what a security or commodity is worth at a given point in time. The VCPMI uses technical analysis in the form of mean reversion trading, which seeks to capitalize on extreme changes in the pricing of a particular market based on the assumption that it will revert to its previous state. The VCPMI can be applied to both buying and selling, as it allows a trader to profit on unexpected upswings and save when security or commodity is trading at an abnormal level. Visit ema2trade.com for more details.